Um, Marc Wilson, our first speaker. I got Mark gave us a good talk at our Innovators Network in the beginning of the year. He positioned the strategic importance of technology for us. He looked at how the business models are changing, and it fitted in perfectly with what we wanted to do today with Techfest, and that is to look at technology as the catalyst for better insurance business, not just as technology for technology's sake. So Mark is the founder and CEO of Global Advisors. He will explore where the biggest opportunities lie. He will talk about the fundamentals in terms of redesigning business models, customer relationships, and competitive advantage. So Mark, thank you very much for taking the time and being available to discuss this with us. And without further ado, I will hand over to Marc Wilson, founder and CEO of Global Advisors. Thanks, Mark.
Thanks, Tony. Thanks, Brent. Sorry about the technical hassles. Our link wasn't working, but we're on at last. Thank you. Yeah, today, in terms of time, we've lost quite a bit. What time were we supposed to start, Tony? At 9?
Mark, you've still got 45 minutes.
Okay, brilliant.
Yeah.
Okay.
Yeah.
So let me just give a brief introduction. So I'm Marc Wilson. I founded Global Advisors 20 years ago, managing partner of Global Advisors. Previously at Gemini Consulting, where I headed up the financial services practice, and before that at Deloitte. So quite a lot of financial services experience across banking, corporate investment banking, retail, and life insurance as well. Quite a lot of life insurance experience, and most recently, a lot of AI experience. I think what is also important is that when I was at Gemini Consulting, I headed up the e-business unit. So I lived one of these cycles before, and some might call it a hype cycle, some might call it a dot-com bubble, etc., or a bubble now. And so I can contrast, certainly for myself, I contrast what I'm seeing right now in AI with what I saw at the time in the dot-com bubble. And so I think that's quite useful, certainly for me, because I feel like I'm able to read some of the signals quite well. And I think that there are similarities and there are differences. I think one of the biggest similarities that I saw or I see is that as we were leading up to the peak of .com, people talked about how it was going to put the traditional incumbents out of business. So anybody who's on the call who's been around for a while and was around in the early 2000s and lived through that probably recognizes some of the existentialist type talk about what AI holds for the future of business and the future of insurance. I think that the difference, though, is having lived through that and having led the e-business unit, this time feels different. There's a level of reality attached to this, which there wasn't during the dot-com cycle. And also with the benefit of hindsight, I think what we can see over there is that industries have changed since the dot-com bubble. And what I mean by that is if you look at industries, for example, the media industry is unrecognizable from where it was before the dot-com bubble. And very few of you, I'm sure, buy physical magazines and physical books and things like that. That industry has changed. I'm sure many of you watch streaming video, etc. It's completely different. And so this time around, I think we probably need to look forward to say, how will this the AI cycle change insurance? So without further ado, I'm going to get into my presentation. So we'll share some slides. There's quite a lot of detail on these slides, and so I'm not going to talk to the detail. We will make material available afterwards, and we have a rich amount of detail on our website as well. Right. Okay, so the first thing is, a fairly provocative quote over your chat is, imagine that instead of a chatbot, imagine that this was an agent that says, I've looked at your insurance, you're paying too much on this policy, I've run the comparisons, shall I negotiate or move you, right? Now, for some of you, perhaps that sounds far-fetched, and And for others of you, perhaps you've installed an agent, perhaps you've installed OpenClaw, or you've installed Hermes. And so this is something perhaps that you've tried. You've sent an agent out there, and you've got it to review some of the policies that you have, or the admin that you've done, and your agent has actually made a proposition to you, right? So very famously, Pete Steinberger has the example. He's the developer of OpenClaw, where he went out and came back after lunch, and the OpenClaw had negotiated a deal on a second-hand car purchase, or certainly one of his contacts did. And so that world is here right now. The technology is there. I'm not sure that we're there from a business perspective. And we'll share some examples today of those that are really running ahead and trying to prepare for this. But this world is technically completely possible today. I think that the other part of this, which is important, is in my conversations with some of the insurers, some of the more technical insurance. So, for example, some of you on the call, I'm not sure if you are from commercial insurance, perhaps fire insurance, etc. And those contracts are hugely bespoke, negotiated contracts, etc. And so this might seem completely far-fetched. But in reality, what that means is that at the very least, the customer potentially has got expert advice to review a contract and get feedback in real time. And so it might not be one where it's doing comparison shopping for you, but certainly your agent is able to review your insurance position and then make suggestions and help you negotiate. So one of the key things about that is, do you own that software, or has it been intermediated away from you where somebody else owns the software which is sitting between you and your customer? And banking's already here. So already we're seeing AI in banking, and we've got a lot of experience in that, where agents are able to look at cash balances, move lazy cash overnight to get the best rates, etc. And they are operating for the customer in a best practice mechanism. So we definitely think that insurance is on the way there. So three questions which I'd like you to think about, during this talk today is, where is your value actually created? And what I mean by that is it's a two-sided question. Where is the value created for you, if you're an insurer and a broker, etc.? What justifies your commission? What justifies your profit margins? And then where is your value created for the customer? Why are they choosing you? Then who owns the customer relationship? Is it, if you're a broker, if you're an intermediary, is it really you? Is it the insurer? Is it the AI agent? And then what's your moat? What's different, which you are doing, which cannot just be bought? And I think what is top of mind for many people right now is, I'm sure one or two people, maybe more on the call, had some experience of Claude Fable, which was live for about 2 days last week. And during that process, people found or saw a different AI. And people were switching between AI providers overnight, right? And if that technology is available generally to people, then you could pick it up, somebody else could pick it up, and make that generally available to customers. So the technology that is called Fable or another AI technology, that's never going to be the moat, particularly if all you're doing is putting a thin veneer of a package on top of that. And I think that's probably one of the most challenging questions relating to AI going forward, is how do you build differentiation on top of that? So we put some continuums over here, or shifts. And I think that what we'd like you to think about is just, where are you and where's the customer and where's the industry for each of these. The first is, traditionally we pay claims after losses. So there's an event and there's a claim, and then the claim is paid. And what we believe is happening is, we're moving forward to a prediction, prevention, and shaping behavior for loss. And that's not new. So if you think of the shared value model, and certainly Vitality and Discovery have got that, is people are moving towards a future where they are, their premiums might be adjusted, rewards might be adjusted for doing the right thing. And if you look at Coalition, what Coalition is, a cyber insurance player in the US, what they are doing is they are actively involved in the monitoring of their clients' risk and in real time adjusting their risk assessment of the customer and providing advice to the customer on how to avoid loss. And so we think that that is one of the most fundamental things. We've seen the evidence with discovery and vitality in the past. Now overlay AI on top of that. The next one is episodic. Annual engagement is typically how this happens. So it's a policy renewal, etc. It's a negotiation, etc. And the AI logic around that is that that moves towards continuous engagement through data, nudges, alerts, service layers, etc. And so if you look at that, look at how Discovery is now telling people to go to the dentist. So they're getting a reward that they can use to go to the dentist, reducing their exposure. Coalition, telling their customers you are at risk of a cyber attack, and getting that that behavior change. And then Lemonade, which is marketed as the most cyber aware insurer. Then manual underwriting review. Typically, I've been in this for a long time, so I can remember all the manual underwriting, the blood tests, all of those types of things that might go with a life insurance underwriting review, and that expert underwriting where you had people who'd done it for 20 years and were able to assess risk. So where does that go? It goes towards AI-supported submission triage, where summarization, prioritization looks at where the most needed human intervention is and where the most needed expert involvement is. And what we can see from players like Klarna, for example, is that it's not going to be pure automation. It's not going to be something where everything gets automated. That didn't work out well for Klarna. What happened is they brought humans back and they triaged and they moved the experience towards complemented human intervention. So what we're seeing over there in terms of the insurance space is AIG and Aviva are doing some pretty impressive stuff around human complemented underwriting. And that can also be reversed, where previously it was an underwriter with 20 years of experience, and now it is an expert underwriter, which is AI driven, supporting a human and embedding some of that experience. Then previously we've had reactive claims handling. So fraud detection, etc., typically happens at the end of the process once you make a claim. Now that can be proactive. There can be automated triage of claims, etc. And what we're seeing over there is players like Ping An are paying up to 70% of their property and casualty claims within 51 seconds. So that is a massive shift. And Aviva are doing fraud analytics. Lemonade are fully cyber enabled. So claims handling changes completely. And something just to think about over there is Andrew Ng, who's one of the top people in AI, Professor Andrew Ng, and founder of Coursera, etc. He was working with one of the banks, and he said, when you change a home loan approval from a days-long approval to a 5-minute approval, you no longer have the same product. You have a different product. So think of that in terms of that Ping An claims process and some of the other processes. When you change the time that dramatically, you end up having a different product. Then product-led distribution is the past, where I've worked in those insurers where there's almost an urgency on the insurer to create a new product to give the intermediary a reason to have a conversation with the client. And if you're an intermediary, you know that. If you've got a new product, something innovative, etc., it's a reason to go to a client and talk to them about their needs and then talk about how that product might meet their needs. So that is changing to one where we've now got interface-led distribution, where the interface layer describes or shapes discovery and recommendation. And so that could be OpenClaw, where it might be very proactive, and OpenClaw or Hermes, one of the agents, actually is looking at the financial portfolio and saying you are underinsured, and then helps the client with that. It could be client-led through a AI chatbot like a ChatGPT or a Claude or Grok or one of those where they're saying, what should I do about insurance? And that is changing quite a lot. I think I heard that during the dot-com era, and that's something where we have to be skeptical. Behavior takes a long time to change. But here there's a proactivity, which directly talks to that old saying, about insurances sold and not bought. Well, here it could be proactive from the AI. Then broker administration. Again, I've been around for a while, so I remember when the compliance burden started to increase. And what happened in the UK is they formed broker networks primarily because the brokers couldn't cope with the admin load. And so the brokers came together in the individual capacity, they came together into networks so that they could share compliance administration, etc. And here I think there's another opportunity to take that further. How can AI be deployed into this to help intermediaries be better intermediaries? So another connection between the product provider at the back end or the underwriter at the back end and the broker has typically been a lead generation where providers have provided their intermediaries with leads about which clients are ready to talk to. It could be around a education policy for somebody who's got new children, new babies, etc. Those kinds of leads historically have been through data mining and provision of leads to intermediaries, etc. AI provides a much warmer way to go around providing leads and client advocacy. And then balance sheet risk transfer is probably the one where, I mean, we know that from reinsurers, it's a very old model where reinsurers, you transfer some of your risk out of your balance sheet to a reinsurer, etc. But that, I think the danger is that that becomes far more punitive, where the large balance sheets of today actually just become commoditized and they have to lend out their balance sheet. In banking, we're seeing that already. So in banking, we're seeing in the credit provision space where credit is being auctioned off to bidders on the back end. Now imagine that we're in that situation in insurance where risk is being auctioned off to underwriters on the back end. So that's probably the worst fear of every underwriter. The business model implication over here is that we're moving beyond being claim payers and policy administrators to becoming players who are designing intelligent risk participation. So really, if you think of some of those, this is not about a tool. This is not about a tool that you adopt either for your underwriters to be better underwriters, for your customers to have a different relationship with you, etc. This is a layer forming underneath people's feet. And if you look back at the internet, the last 20 years of the internet, you could probably recognize some of that in how things have changed over the last 20 years. There are things that 20 years ago you wouldn't have thought of doing, but behavior is fundamentally altered. And AI potentially faces a far more accelerated path towards something like that. How do we know some of this? Well, we've been active with this for the last 2 years intensively. 2 years ago, I saw some of this coming and I felt that for our business, consulting would never be the same. And where I saw that was where I saw AI become an inference step in our traditional process, which would take over more and more of the intelligence in consulting. So we've had to rebuild completely. Our team has over 600 models available to them on a daily basis, hourly basis. We've got over 200,000 RAG documents, which is a lot for a small business. We've done well over 20 billion tokens of usage. 100% of our employees have access to AI, and 100% of our employees use AI every day, 5 days a week. So we've certainly tried to make that journey towards AI native. I think what's not seen on that is that behavior takes a very long time for people to take advantage of all of that technical capability and fundamentally become native about how they use AI on a day-to-day basis. And where we see that is that some people are far better at getting results from AI than other people. And that tells us that there's a large component of this change, which is in the human element of how AI is being used. So I think one of the harmful things is that if you think of that and you think this is just about workflow automation, well, I think you're undercalling the scope of the change. Now, years ago, probably in the early 2000s, I can remember being in one of the large life insurers. They had electronic workflow, but they were trucking policy apps around the country to different branches, etc., to manage the OCR process around big peaks in application processes. So automation has been around for a long time. That's changed completely. And now with electronic apps, etc., that process happens automatically. Um, so there's been a huge change in terms of automation. But again, if some of you have been around for a while, or if you've read the theory, you might recognize the old re-engineering revolution type days where Michael Hammer and James Champy talked about don't re-engineer, don't automate, obliterate, right? Was the calling of the time. And re-engineering had very many similar stats to the stats that you might be seeing today. So I recall vividly that the stat for re-engineering was about over 70% of re-engineering projects fail. And if you hear some of the research coming out today from most of the players, they are saying that in 70 to 90% of organizations that have adopted AI, they're not seeing the level of benefit that they expected. And so this takes time, certainly to bake into the efficiency layer, etc. But you're undercalling it if you're just looking at efficiency. It's not just about automation. And why is that? It's because inference changes business models. Automation was about workflows and deterministic processes. It was about steps that you codified and then you put through systems. That changes completely where you can have automated intelligence and decisions, etc., that are built into that. And again, that's existed for a while, and there have been things like expert systems and others which have helped organizations, put some equivalent of intelligence in, but not to the scope of today. And so this is about where you can get human level or expert level intelligence inside your workflows and processes. And that really allows you to rethink your business model. And the challenge with that is that this pressure to change business models rather than just automating will rise faster than most incumbents' ability to absorb it. And we can see that. So we've been on this path for 2 years. And as I say, some of our team members are way ahead of others. Humans over here are going to battle to keep up with the technology capability and the pace of change. And certainly, I think, I'm on that leading edge. And I would say that I wasn't ready for what I saw with Claude Fable last week. It was a level of capability that I didn't expect that quickly. So, what does this mean? What kind of insurance business model compound advantage as intelligence becomes cheaper? That's a really fundamental question. It changes insurance when it's just AI stops being a sidecar to workflow and it starts redesigning the business model. And the winners over here are not going to be the guys who are running lots of pilots right now and getting lots of capability through osmosis. They're the ones who are really rethinking their business models and how this changes their business. Now, the quantification of that is in the exponential graph. So if you look at this, some of you might have heard or seen this analogy, and some of you might have heard the phrase hard takeoff. And what that hard takeoff phrase is about is it's saying that as this intelligence advances and it compounds, compounding things have an exponential nature. And so they seem very slow at first until that compounding starts to rocket. Now, you're all in finance, and so you know the impact of compounding in finance. And certainly you know with retirement and pensions, the impact of compounding on somebody's retirement benefits, right? And so if you look at that and you apply the same to AI, what they're saying right now is that Boris Cherny from Anthropic is not coding. He says he hasn't coded. He's the head of coding, and he hasn't coded for the last 4 months. The AI inside Anthropic is building the AI inside Anthropic. And so people are looking at that and saying that is this compounding effect, which eventually leads to a hard takeoff. And many people are saying that the Claude mythos, the Claude fable experience is one where they saw the takeoff happening. Now, apply that to insurance and imagine that there's a company out there that is on the yellow curve and it is taking off. The danger of being on the green curve, solid green line, is that if you get that compounding effect, but you're behind, you will always be behind. And that gap will get exponentially bigger over time, no matter how fast you catch up you will never make up the difference, right? And again, you guys understand the pension and the retirement benefits business. You know that if you start saving at the end of your working career, you can't catch up the person who's been saving the whole way through. The same compounding logic applies to AI inside a business when it's shaping the business model. So people are trying to leap ahead, lock in a lead because they won't be caught. So where are we seeing this? Well, there's the readiness layer, and you've got to be doing that, right? So that's the necessary part to compete. It's the culture, the talent, the data, the technology, etc. And in our 2 years, we've had to fundamentally rebuild our entire business. So we have changed out virtually our entire core system of record, knowledge management layers, etc. And that applies for everybody else as well. And those of you who work in technology and work with AI inside your organizations will know that you don't just deploy AI into your organization. You need that readiness in the layers below it for it to take advantage. But far more than that, you need the people to be ready. And that's probably the most difficult one. So Access is a good example. The quote over there, they're resetting the culture, creating a different frame in terms of getting that high-performing operating model. Then value chain reinvention. Now, we've heard that a lot, particularly around the dot-com era. And for me, one of the biggest corollaries or the things that I remember was the robo-advice discussions from the 2000s, where there was this anticipation or this fear that you would have robotic advisors that would help intermediaries or clients or consumers with making decisions. And that was largely stillborn, right? And part of that is just because consumers and policyholders, etc., they didn't trust it. They trusted the person who was in their living room and sharing their supper, etc., the intermediary, who was actually guiding them through the process. And I would argue that time has changed and that we're seeing a different younger generation who are native to the electronic process. And certainly, I mean, the stats would say they're more comfortable having a discussion through their phone and through an internet browser than they are with a human often. And remote work adds to that, etc. There are many things which add to the comfort around technology. And so making sure that you can support those younger consumers is big. And so there we're seeing AIG that are fundamentally reimagining their business. So they're building a digital twin for their whole business. They're working with Palantir and others to actually put in place the ontology which describes their whole business in digital terms and which can actually at least do the same as their business in digital terms, but then also reinventing it. And then Axis, which are looking at AI and underwriting claims, operations, etc., and reinventing that. So I think the intermediation layer, that's a big part of this, but certainly every process. And then there's the business model disruption. And I think it's useful to look at what you can see now because you can feel it. And Discovery is a good example of that. I've been around for a while. And so in the days when Vitality was starting, I can remember the shock to the industry when Adrian Gore and the team, they had first been at Liberty, they'd pitched the idea, they'd been unsuccessful, they went to Laurie Dippenaar and First Strand, and they got the backing, and they had this idea that they could change fundamental drivers of actuarial assumption, mortality rates, etc., by behavior. And clearly people didn't believe them. Some people didn't believe them at the time, which is why they weren't backed in their original jobs and they had to leave and recreate. And so there are people right now who are reimagining all of insurance. What are they reimagining insurance as? And you'll hear later today from people who've tried that. So Hollowed is a very good example of re-innovating some of the insurance with partnerships, etc., with cell phone providers, etc., re-innovating around brand. So there's been a lot of that, but I think that that's going to take off in a far bigger way. So as intelligence gets cheaper, what gets more valuable, right? So I think this is really a critical thing, and that is as intelligence effectively moves towards free, and Daria Amadai talks about having a data center full of geniuses, and many people criticize him for that. There's two things that you have to look at. One of the trends out of there is that intelligence in terms of token cost for AI has dropped 94% over the last 2 years. So the cost per token or million tokens has dropped 94% in 2 years. On the other hand, the demand and the hunger for tokens in terms of how AI is used has dramatically increased. And so some people, like Uber, for example, Uber went through their entire IT budget for AI in 4 months because they were so hungry for the use of AI. But what's it enabling? It enabled Stripe to migrate an entire system that they were looking at a 2 month migration. They did that with Claude Fable within 2 days. So what gets valuable when that intelligence is able to do things, you know, overnight, and when you have almost a limitless supply of that intelligence? That is the critical business model question. And then what stays human in that process? Well, we think that AI is going to reward brokers and insurers who own and enable the trusted intelligence layer. Fundamental to insurance is trust. And I can remember doing some brand research in quite a while ago. And it was fascinating listening to consumers and how they made decisions around which insurance provider and which pension provider, etc., they would give their money to. And remember that you are trusting your money to a company that's going to be there when you claim and is going to provide the way you expect them to provide when you claim. You cannot afford for that to go wrong. And so making sure that trust is embedded in the experience and trust is embedded in the brand is key. So that means that you're probably not going to have ChatGPT with ChatGPT branded insurance. But Aviva have already enabled an app within ChatGPT so that you can have a discussion with Aviva through your AI chatbot. And so in ChatGPT, when you're saying, how does insurance work? When can I claim? What are the standards? You can enable Aviva, the app in there, and you can then have a discussion with Aviva through ChatGPT. Now that lends the Aviva brand and the Aviva experience to the comfort of a known, highly warm relationship that you have with OpenAI through ChatGPT. And so I think that's where you've got to say, how will customers behave related to that need for trust, and how will they behave in terms of their desired experience, and how do those come together? The intermediated model is not obsolete, it's just been repriced in that relationship. The danger is that ChatGPT is going to have many apps, not just the video. And so ChatGPT might be able to say, this is the best policy at the best price for you. Now, what we're hearing coming out of OpenAI is the next version of ChatGPT is going to be not a chatbot. It's going to be aiming at being a one app for your online lifestyle. Now, there have been many attempts at this in the past on mobile and others, but imagine if it gets part of that right. And so people are interacting with online through ChatGPT on a day-to-day basis, and insurance and other product providers become like the Play Store or the Apple iStore, and they're installed in the back end in order for you to have access to the consumer or the client. That's certainly what is being thought of as a potential future. So the Aviva integration is important, but not because it's going to displace everybody, but it's just going to show what can be done. And Aviva is explicit that the existing routes will continue to be there. And again, we've seen this before, and I think the value of having been through a few of these changes in the past is the direct relationship as I've experienced it. When call centers went out there, traditionally that call center, they tried to make it as similar as possible to the offline relationship because customers wanted that, but also the intermediaries had to be assured that they weren't being undercut by a call center relationship, because that cannibalization could ultimately damage the brand and damage the intermediary relationship. And I think that there is a very, very big channel conflict journey that has to be navigated here. I think the other part of this is what we're seeing in the payment space is Visa and MasterCard have announced that they are introducing agent intermediated payments and commerce from this year. So it's already in place and in trial. And that's one where those agents can actually shop for you, they can pay for you, etc. And you know the adverts that are on TV in South Africa right now, and a lot of those are about the 12 quotes that somebody's got. 12, right? You know that. And imagine now that that's all hit behind a Claude or a ChatGPT, and that is now making a recommendation on top of those about what are the benefits and the disadvantages around each of the quotes. So distribution is going to shift. The power is going to shift to whoever owns the trusted intelligence. Traditionally, that's been the intermediary, who somebody probably meets playing golf, and they having a beer with regularly, that comes to visit them, once a quarter and has dinner with them, etc. But traditionally, more and more, that's the person or the agent that they're speaking to every day on their phone. So we're already in the space of LLM native distribution. They won't replace every route at once, but they will alter the expectations. I think that fundamentally what that does is it questions what insurance starts to do. And if this is just about somebody that pays a claim when there's a risk event, I think that world has moved already. We're a long way past that. So the long-running discovery model, the vitality model, we've seen the success of that. It's become a global phenomenon that's been rolled out to other insurers like Hanover and others, and Prudential globally, right? So the returns on that model, Ping An and others, we've seen the returns on that. It can change behavior. It can fundamentally change the actuarial drivers. So what's the next thing that does that? Now, what's interesting is that it's almost never the leader that comes up with the next disruptive innovation. It's almost always a challenger. So the challenger that was Adrian Gore and the team that were in Liberty and left, somewhere in an insurer right now, or somewhere in an insurtech, there are people with an idea of how to do this differently. And those are more likely to be the people who are going to come up with the next generation challenger. So what does that mean? It's not that Discovery used technology well. It was that Discovery changed the basis for competition. And so if you look at that and you look at momentum rewards and all of the other things that are out there, others have had to follow and adapt to that process, to that new way that consumers think of insurance, just the way OutSurance did with the out bonus, etc. So this happens every now and again where somebody changes the way people think. That's happening right now. The other part is Discovery is not standing still, obviously, and they've now got Vitality AI, and some of you probably work for Discovery and might be part of that. And so in the app already, there's the little AI logo, which allows you to interact through AI. But the question is, do consumers do that through the insurer, or do they do that across the insurers and the intermediary channel? So how does that relationship change? And then value is shifting from paying and processing towards predicting, preventing, triaging, and orchestrating. And so I mentioned earlier the coalition are in the cyber insurance space right now, where they plugged into the customer systems and they are monitoring on a day-to-day basis. And they're monitoring risk and adding value to say your risk is increasing, you need to do this, and giving the policyholder the benefit of that real-time risk advice. Discovery is doing that to an extent by saying you need to go to the dentist. Okay, so how does that change completely? Where AI companies, you guys, some of you might have the Oura ring, which measures your sleep quality, etc. Those are the players who might be looking at this and saying, we actually have information about the customer, which is valuable for their risk decisions. So where are we seeing some of those leaders right now? Well, Ping An, I talked about that earlier. So Ping An going for they wanted 111 quick claims being 59% of total claims, one sentence case reporting, one click material uploading, and 1 minute claim reviews. As I mentioned earlier, 70% of personal injury within 51 seconds. And those are crazy stats, right? And then through single point access integrated into the mobile app. So Ping An, huge business, massive business, and lots to learn from those kinds of players. AIG, you are trying to build the digital AIG with digital twins, where every single thing in that business their processes, their people, etc., are reflected in the ontology around the business. So that's a Palantir popularized term. Ontology means the study of language, and ontology is all of the terms as to what does a premium holiday mean, what does a anniversary mean, what does a claim mean, etc. Those things have to be completely standard so that when AI is applied to them, they are not subject to interpretation. So AIG is doing quite a lot of getting the balance between deterministic behavior and inference right. And then Aviva, who are leading some of the integration into that front-end AI environment. So a lot there. So firms need to really prioritize value chain reinvention opportunities based on value upside, ease of execution, and strategic impact. So we think there are 7 things that the board agendas should be for the insurers, underwriters, reinsurers, brokers, and platforms. The first one is, where do you want intelligence to sit? Now that's a really, really critical question. There are so many places where intelligence sits today. Obviously, it sits everywhere. But when you are making these decisions about prioritization, where are you getting the most return on this incredible intelligence? Customer facing, broker facing, operational, or the invisible infrastructure. Then map your business into 3 zones. The first one is deterministic control. Don't outsource deterministic workflows to inferential AI. It's a waste of AI, right? And it introduces probabilities where the decision needs to be a workflow-driven step. So all of the regulation, etc., says that that is not acceptable. You need an auditable process which behaves a certain way. Then inferential augmentation. Where can you introduce inference into the process? And then where do you need that critical human judgment? The Klarna example that I mentioned. Then build the harness. Now, one of the amazing stats that literally came out last night is that the Claude code got leaked a few months back. And the researchers have been looking at Claude code. And literally 1.6% of Claude code is the model. The rest of the model, 98.4%, is actually the harness and the scaffolding around the AI model. So we all get carried away and talk about the models. And it's rumored that AI harnesses or AI models for Fable and Mythos are in the 10 trillion parameter range. And now just think that 98.4% of what Claude Code is not that. It's the harness around that. So what is the harness that you are building inside your business around this inferential capability? Then choose the distribution posture. Where's the trusted intelligence? How do you enable it for your partners? Because your partners are still the most critical player or layer in this process, be that ChatGPT or your traditional intermediary. And then if you don't do that, accept that you might just be bidding on risk one day. Then stop managing AI as a fragmented innovation portfolio and start thinking about 3 to 5 design choices for your business as a whole. That's a board level question. Redesign capability and apprenticeship so the organization can actually absorb the change. And one of the things that I will absolutely tell you, this is not about going and hiring a 18-year-old who knows how AI works. That's not what AI native means, right? This is about AI native means that all of your people in your organization have to be accomplished at working with AI on a day-to-day basis. Your systems need to enable it. Your data needs to enable it. Your cybersecurity needs to enable it. All of that needs to be in place in capability to get the most out of AI. And then a really big one is in the African context, make language, local data, infrastructure, and regulatory trust first-class parts of the design and not an afterthought, right? We're seeing in many countries where you cannot rely on a cloud player. You have to have the capability onshore, in country, in order to meet the regulator requirements. Language is a big issue. Most of the AI out there is not local language capable in the African context. And so it's a gap, it's a major one, where if somebody gets that right, they could deploy new AI into Africa that allows consumers to speak in their vernacular to the AI experience. That's probably one of the biggest changes that we'll see. So what kind of insurance are we trying to become before somebody else decides it for you? So one of the things I said in our last talk, Tony will recognize this, Brent will recognize it, and those of you who were in the last talk will recognize this, is that AI is an amplifier. Success is not going to be knowledge. It's going to be your character, your organization's character in terms of how you respond. Thanks very much.
Brilliant, Mark. Thank you so much. I knew you would ace that one. So thanks for the fascinating information. I think the one thing that I would want to ask you is, and I think that might be on most people's thoughts here, I go down rabbit holes with regards to anything, and AI obviously has been one of those rabbit holes. Insurance industry's reaction to it has been, I've spoken to hundreds of people about it. I've had the pleasure of listening to you twice now, and reading quite a bit of your stuff on your website, etc. My question is, where do the average business person like myself and like many of the brokers, etc., that are on here, where do you go for help? Where do you go to find out what should I be doing? How do I use all of this stuff that you've been talking about? How should I think? It's good to read, like you set it out very nicely, but who's going to hold my hand in this journey?
So thank you for that step, Tony. Of global advisors, of course. I'm kidding. So, look, I think that one of the AI native companies out there, I think it was Every, had said that people at the CXO level, so CEOs, etc., need to be spending between 10 and 20% of their time every day on AI. Now, my experience is that no CEO's got that kind of time, right? So it's a really difficult thing. The pace of moving with this is, for the last 2 years, I can personally say I've hardly slept. Consulting is completely different going forward from what it was. And so we are dealing with a revolution, which really has demanded every fiber of my being to get our business ready for that. And it changes so quickly. So, when was it? Was it Wednesday last week? We had Claude Fable, and on Saturday morning we didn't have Claude Fable. This stuff it moves so quickly. And my view of what AI could do was very different on the Wednesday from what it was on the Thursday, right? It's just incredible how fast it is. While I said that piloting is not enough to get you there, and that experimentation is not enough to get you there, it is absolutely necessary that you do pilot and that you do experiment, because it's only when you really push the envelope with trying different things and getting familiar that you can actually see what the stuff can do. I think that at a personal level, what I would suggest is that there are some people out there that are out there every day with amazing information about what's happening. And I can't cope without those people. So one of them is the guy called Nate B. Jones. He literally has an hour-long session every day where he's going through what's happened and what the models can do, etc. Now already, that's an hour every day. So you have to pick these things. Something more accessible is probably a guy called Matthew Berman, who talks about some of these things. Find a YouTube channel and just get familiar with some of the people that are talking about this on a regular basis. Matt Wolf is another guy. There are these guys that are really, really good at talking about the latest thing. I think you need to digest news in a micro format, so use the old RSS feeds and X feeds, etc., to get the headlines and keep on touch of the daily happening, right? TikTok's probably something for some people who are more comfortable with that, that you can keep up to speed. And the algorithm sends you stuff. So the more you start inquiring about this stuff, more your algorithm will change to show you more of that stuff, right? So that's at a personal level. I think that at an organizational level, there are two things that we are seeing which are, I think, fundamental. So during the internet age, I ran a corporate incubator, which was where you could take stuff out of the organization, you could put it in the incubator, and you could give it all of the fuel and the assistance necessary to succeed without the traditional organizational constraints. And then you could deploy it back into the organization after it had found its feet. Um, what I also saw, and many of the biggest insurers in the country, some of you will definitely work for them. I saw skunkworks operations. The one I had to go out the building, walk around the building to a door in the side of the building to a basement, where there was a team working on the next version of this insurer. And some of you probably recognize that case and will know who that was, because they just had to take the people away from the noise and give them the space to think about the future. Now, unfortunately, almost all of those skunkworks programs failed. There are very, very few that have actually succeeded. But I think that the incubation example is definitely, it's also called acceleration, slightly different format. But incubation acceleration is definitely something where the time has come again, where people need space to say, we're dedicating focus to this. Cycle people through that, where you say, one day a week, you are going to spend time in the incubator or the accelerator, or so many hours a day from the organization, where they can see the art of the possible. We'll go live probably tomorrow with something on our website about visioning, AI visioning. And um, visioning over here, the art of the possible, is key. And I think that the biggest complexity or difficulty here is that most people just can't imagine what's coming. They can't imagine what's different. And so they think in terms of their current role, their current business. And there are people out there who are coming from left fields who are not constrained that way. So, giving people a view of the art of the possible is a really big part of this as well. Um, follow, I follow companies, follow people like Ping An, Aviva, and others, and say, what are they doing? What are the news articles that are coming out of those organizations? Because if they're doing it, they are probably not as fast as the insurtech and the fintechs who are racing ahead without their constraints. So you know that you're seeing a lag indicator when Ping An is doing it or Aviva is doing it, as crazy as that sounds, right? But definitely, I mean, subscribe to the news feeds around, some of the big leaders. Um, Another big thing that I do is investor presentations. People tell you what they're going to do in investor presentations because they're talking up their share prices, right? So go and look at the investor presentations when they come out for the big players and see what they're promising for the current year. That's a really good insight as to what's coming down the track. So those are some ideas. Another thing which we're talking with one of the insurers we mentioned to them is I think shared services is a big part of this. So what Mercer has done, Mercer, one of the biggest players in the world, is that they have said we can't afford for all our different businesses to do their own thing here. They will all fail. They'll all fail slowly and they'll duplicate. So they put together their own open AI, if you like, for the Mercer Group, where they are making the fast advancing AI available to players as diverse as their employee benefits advisory group to Oliver Wyman, their consulting group. They're all drawing off a central AI capability that's accelerating the group as a whole. So I think that that's a really smart way of doing it as well, is to make sure that you're not diluting or ending up with a stranded capability that everybody's not benefiting from.
Yeah, sure. Mark, thank you so much for that. I could carry on questioning you for a long time, but for the sake of this day, I need to move on. So thank you very much for sharing your knowledge, and we look forward to hearing much more from you afterwards. And just for that, make sure, guys, that you do visit Global Advisors website, because as Mark said, there are lots of things there that are very interesting.
Thanks,
He
Mark.
didn't mention that he is one of the people that you could actually follow and read about what's going on in AI. Thank you, Mark.
So just, there's a lot of global advisors out there. So we are Global Advisors with the S.biz. So you'll see that we put stuff out there, and often it's bite-sized. So we do quotes of the day, terms of the day. Usually those have got a ton of information behind them, and you can get that through our social media feeds as well.
Brilliant. Thank you very much, Mark.
Thank
Have
you,
a good
Tony.
one.
Mark.
Thank you.
Thanks, Brent.
Thanks.